All right, good afternoon and welcome back everybody to another presentation. Today we are looking at FreeGold Ventures. This is a stock that's traded on the Toronto Venture Exchange and on the OTC market. On the Toronto Exchange, you can find them under the ticker FVL, and on the over-the-counter market, you can find them under FGOVF. As always, we're going to talk about the management, the projects, the capital structure, the balance sheet, recent news, and my opinions. And to start off with the management, I'm going to start off with the CEO, Christina Walcott. She is the CEO of the company since 2009, so she's got a little bit of a history with this company. For over 15 years, she's been the CEO of this company, and previously, she has experience in the diamond and the uranium exploration industries. Couldn't find too much about that on the internet, so I do think that this is her first big role as a CEO in a publicly traded company. But to see her in this position for 15 years, that's a very good sign. Because she obviously knows everything about the company, the history, the past, and the future outlook of it. The VP of Exploration, Elvin Jackson, he's been the VP since 2010, so also a very long history with this company. He helped develop the Euro Zinc mining, which was bought by Lundin Mining for $1.8 billion. You will see in the board of directors that there are a lot of people from that venture, from Eurozinc Mining, in this company. But Elvin is the VP of exploration. And in his 40 years as a geologist, he has discovered two major gold deposits and a copper deposit, although no names were given, so I don't know where those are or if they have any significance to the project that he is working on right now. I would like to know those names so that I could look them up, but they weren't given, so that's unfortunate. The CFO, Gordon Steblin, he has 30 years of experience with mining companies, and he is currently the CFO of LC Development and Edgemont Gold Corp. Both of them have pretty tight share structures, so that was nice to see. Not a lot of bloat, not a lot of warrants or options outstanding, so that is a good sign. And if we look at the board of directors, you can see a couple very interesting names. David Knight, he's the chairman, and he is a retired partner of a law firm, and that is the oldest law firm in Canada, or one of the oldest. And he is giving financing, M&A, and other law advice to junior exploration companies. He's rated amongst the best lawyers for natural resources from the period 2011 till 2022. So this man really knows what he is doing surrounding law, and that's always good. So now we're coming into the space where all the previous executives of the Eurozinc mining venture come into this company, because Ron Ewing, he is an ex-director of Gold Ore Resources, a 50,000 ounce a year producer that was bought by another mining company, but he was the ex-vice president of Eurozinc Mining and the ex-vice president of Lundin Mining. So this is a heavyweight in the industry. He has been at multiple big mines. He's been at Lundin Mining, and to see him on the board of directors of FreeGold is extremely good. Elvin Jackson is also a ex-executive from Eurozinc Mining. He was a founding principal of the company, and he has operated the mine up until a production target of 200 million pounds of copper a year, which is a pretty significant copper producer, especially in Europe. Eurozinc mining was located, or is still located, in Portugal. So it may be interesting to do a little bit more research on Eurozinc mining if you are interested in looking into FreeGold Ventures some more, because most of the directors come from that company. So obviously these people know each other, they've worked together, and they formed some sort of a team, and they've moved on from Eurozinc mining to FreeGold Ventures. And if their previous endeavor was successful, well, that bodes a lot of confidence for the following venture that they have. And that's why I think it's so interesting that all of these names are still in this company, even though Eurozinc has been sold for billions of dollars to Lundin Mining. The directors are still here, and they are still looking for another big project. Garnet Dawson is the ex-CEO of Gold Mining, which is a reserve company. It's a pretty unique structure in this industry. That company has a lot of ounces worldwide, pretty diversified portfolio of assets. It's about a 250 million market cap company, and I do believe that it's more of a financial operation going on there, where they buy ounces in the ground for less than they are worth, and then once the bull market goes on, they try to sell these deposits again because it's so diversified. Anyway, he is on the board of directors as well. He is also an ex-Eurozinc manager. He has led the exploration team, which was charged with increasing the size of the deposit. So seeing that his current company is also in the exploration market and FreeGold Ventures is also still in the exploration market, I do get why this man has chosen that path. So now that we know a little bit more about the board of directors and the management of this company, now that we know that it's a tight team that has worked together on a previously very successful operation, has moved into FreeGold, well, what do they have at FreeGold Ventures? FreeGold Ventures has the Gold Summit exploration target, which is located in the red circle on the middle of the screen. It is located in Alaska, which means that it's always cold and very snowy there. It's nearby Highway 2, and there is an airport nearby for some fly-in, fly-out work. The nearest town is about 30 kilometers away. That is the town of Fairbanks. So if you want to look this up on the internet, look up Fairbanks, and then about 30 kilometers north of it, you will find a big open area where the project is located. Fairbanks is a mining town. That is because the Fort Knox mine is located about 20 kilometers away from it. And I'm going to close my presentation real quick just to show you where the Fort Knox deposit is. This is Fort Knox, and this is where the Gold Summit is. Fort Knox is a very famous gold mine in America. It's a very fascinating history. If you're into that, look it up. I'm not gonna talk about it in this video. But the town of Fairbanks has a lot of mining people who worked at Fort Knox and work in mines all around this area. So that is very interesting to see. The property has been explored by this company, by Gold Ventures, since 1995, and is currently it's got an updated mineral resource, and they are looking at a feasibility study, but the feasibility study is underway. I don't have a clear date or a projection of when that is coming out, but all we know right now is that they do have a mineral resource, and the resource that they got is huge. They got 17 million ounces of gold in the indicated category at about a 1.25 gram per ton grade, and they get 12 million ounces of gold at a 1 gram per ton grade at the inferred category. There are no measured ounces in this deposit, So of course the company is going to have to drill more in order to move these ounces from the indicated category to the inferred and eventually to the measured, so that they are bankable ounces and they can start getting loans against it. There are varying net smelt royalties on this property because the property has been divided up in a lot of little pieces, and all the pieces have varying types of royalties to different companies. It was a long list, but the royalties vary from 1.5% to 4.5%. So hopefully the company has some resources available to buy those back, because a 4.5% royalty is quite a lot. So if we are looking at this project, you can see Fort Knox right there in the middle of this image, and a little bit above it in the golden color is the project. I'm sorry, I was looking at my mic to see if it still works, but I think that was still good. And if we look at that project and what the company has been exploring, you can see that right here. Putting the presentation on full screen is not really helpful at all because I can't show you what I'm looking at. But we can see here that the company has drilled a lot of drill holes, and right here as well, and they've been stepping out right there to see if they found a little bit extra. But the main resource of this company is mainly in these two areas. And that looks a little bit like this. It's a little bit chaotic, but you can see that this line right here, this is the surface line. And you can see this pit that goes down and comes up. That means that this mine is an open pit mine. That means that all the gold that is there will be open pittable, which is a very cheap way to mine, especially in Alaska, where the movement of heavy machinery is pretty complex since there aren't a lot of people or a lot of road there. And what I think is extremely interesting about this deposit, even though it's just an open pit deposit, is on the one side, it's really big. It's over 30 million ounces. But as you can see here, this is the surface line. These are the drill holes. And this is the pit design that goes down and comes back up. Wait, let me really quickly see if, yeah, everything should be still fine. Okay, I'm sorry for that. But you can see the surface line and the pit design below it. And if you look at the drill holes that come through it, you can see that the mineralization in the drill holes goes through the pit design. So that means that there's a lot more gold that the company currently is estimating that they cannot mine profitably. So they have cut off at a cutoff grade, and that makes for this pit design. But of course, when gold is worth more US dollars, then your mine becomes more profitable. And if your mine becomes more profitable, it will just by, economics, become profitable to mine lower grade gold. So the higher the gold price goes, the lower the grade amount that you can possibly mine falls. And the company gives us a table which shows how many ounces they expect to have with varying cutoff grades. So right now the company has decided on a cutoff grade of 0.5% or 0.5 grams per ton, I'm sorry. And that gives them the resources that we stated before. But if the cutoff grade goes 0.1 gram per ton lower, you can see that their mineral resource increases by almost, it's 17 million ounces there, it's 19 million ounces there, it's about 12 there, and it's about 14 there. So that's 4 million ounces of gold that they have extra. If we drop to 0.3, you can see that instead of 17 million ounces, they have 21.5, and instead of 12 million ounces, they have almost 16. So the higher the gold price goes, the lower grade this company can mine, which increases their resource almost exponentially. So the higher the gold price goes, the more valuable this deposit becomes. This is a very interesting project to look at with a gold price right now of $4,000 an ounce. Because when they were looking at this, the gold price was 2,500 Australian dollars, which is about 2,000 US. So the gold price has doubled. So that would make you think that instead of mining 0.5 gram per ton, you could now mine 0.25 gram per ton if the technology allows it and if the infrastructure allows it. But that would mean that there are a lot of ounces in this project that aren't counted in the official statements, even though the company will possibly be able to mine it. But for my calculation of the deposit value, I am only going to look at the ounces that are stated on the website, meaning the ounces that are mineable at a 0.5 gram per ton cutoff rate. And those are about 17.2 indicated, 17.2 million ounces of indicated ounces of gold. I'm very sorry. And about 12 million inferred ounces for a total of 29.2 million ounces of gold. And if you put that in here with the gold price of $4,000 an ounce, you will get an estimated buyout value of $17.5 billion. This is the number that I'm going to use in a later calculation too. So the share structure, they do have more than 500 million shares outstanding, but they don't have a lot of options and warrants. And given the scope and the scale of this deposit, I don't see this as a big problem. They have about 575 million shares outstanding and a share price right now of 0.85 US dollars for a market cap of just under 500 million. So you can see that this company, given my calculations, is worth about 17.5 billion, and you can buy it today for 500 million. And one of the biggest investors in the space, Eric Sprott, owns about 28% of this company. Management owns about 2%, leaving retail investors and institutional investors with the other 70% of the stock. If we look at this balance sheet, I have to say that I'm impressed by the diligence that this company uses with how they spend their money, because the company has about $33 million in cash as of the 30th of June, 2025. They have about $1.8 million in liabilities, and on a 3-month basis, this company spends about 366,000 US dollars. That's it. They don't have share-based compensations. They have an extremely low office and administration expense. They do pay their officers and their CEO and their other C-suite executives, of course. But they don't spend too much in professional fees. G&A under 400 grand, that's really good. And they spend about $3.3 million on exploration. Again, also very diligently, because almost all of the costs that are put in this bucket, this exploration bucket, are going straight into the drilling of the project and the environmental studies that are related to it. So a exploration to G&A ratio of less than 10%, that's extremely good. Net loss of 3.7 million for the period. They did issue 31 million shares for a almost 6% dilution rate. So if you hold the stock for a year, you can be expected to lose 23.5% of your position. So this is a new sheet that I've added because I wanted to get a view on how long you could hold a stock before you would lose money on it given the dilution rate. So what I'm doing here is I'm taking the value of this deposit, and that is 15% of the total resource value. I'm taking the share count, and I am taking the share price right now. And given the fact that we know the dilution rate of about 24%, these shares will get diluted through time. So this is the first year, this is where we are now, this is in the second year, so 1 year from now, 2 years, 3, 4, 5, 6, 7, 8. That's into the future. So if the share price stays the same, but the share count goes up, the amount that you own, the amount of the company that you own goes down every single year. When eventually it's going to come to a point where there is no more upside in the company because the shares are too diluted. So we can see that right now, if you have a share count of 85 cents and a share count of 75 million, that's about a 500 million market cap. If you divide 17.5 billion by the 500 million, you get about a 35 to 36%, 35 to 36x multiple. So buying this stock right now, if the company would have gotten bought out for 15% of the value, you would 35x your money. If, however, you hold the stock for 2 years and the shares get diluted by 24%, then there's only a 21x multiple. If another year goes by and the stock dilutes another 24%, there's a 17x multiple, a 14.8, an 11.2, 9, etc., etc. And you can see that in here that the multiples drop the longer you hold this stock. This is a visual representation of that. So you can see the thing that this graph just shows me right now is that there's an extreme multiple in the stock, that this stock is trading at an extreme discount to what their the value that they have in the ground actually is. In recent news, they have updated and upgraded their resource. Since I own this company, I've owned this company since 2023, I think. They've increased their resource every single year. They started with about 20 million ounces. Now they're almost up to 30. And who knows in the future how big this deposit will grow, because, as we stated before, the higher the gold price goes, the lower gram per ton this company can mine, meaning that the amount of deposit grows again, making it more valuable. It's a flywheel in that effect. They are also still drilling the project with very high grade over long meters. It's a 2.3 gram per ton over 65 meters and 2.3 gram per ton over 100 meters. So you're seeing that this company is drilling to define the resource better and to move the ounces from the inferred category to the indicated and then eventually to the measured. So in my opinion, this stock is very cheap compared to the potential value that this deposit has. And because it's this cheap, I am thinking that I'm missing some big red flag somewhere that the rest of the market apparently sees, but I completely missed. I don't know. I haven't found it. Eric Sprott is in it as well for 30%. That guy is a billionaire. He's not stupid. He's done all his research. So maybe I'm missing something huge that I'm not seeing right now. If I do, please just let me know. Then I'll reconsider this position. But as I can see it right now, this is just an extremely cheap company with a very good management team, with an extremely interesting deposit that only grows bigger. and a very, very well disciplined management team surrounding the spending of money. And I like all of that. The fact that the management team is an actual team as well, who have worked together in the past on another very successful operation. I have nothing bad to say about this company. I love everything about it. Yeah, this is the stock price right now. You can see that it moved up from about 40 cents to about $1.20. Then it went back down to about 70 cents. And it's been moving up and down till 160. Recently came down to 120. It's on the 200-day moving average support, if anybody thinks that's interesting. I own this stock. I am going to continue talking about it. I love the management. I love the deposit. I think it's all good. But again, maybe you missed something. If I did, if you know something that I don't, leave it in the comments. And when you're there, like the video as well, subscribe to the channel, and then I'll see you again in another video on another deposit on another day. Thank you. Bye bye.